Good morning. This is Rich Morrison with NAU Country Insurance, and this is the Thinking Cap, where today I want to talk a little bit about some potential supply demand numbers for 2025. There's been a lot of buzz about acres for this coming year. We're going to see much of a switch from soybeans to corn, cotton to something else. And so I want to at least take a few minutes to talk about at least the corn and soybean balance sheets. Rather than write them in the market report, thought it'd be easier just to look at them and talk a little bit about them as we go. So, as always, my goal with NAU Country, try to help folks be able to put grain marketing together with the government programs and crop insurance to build a plan, a solid risk management plan for the year ahead. And so let's look at corn to start out with. There's been a lot of buzz about more corn acres. I know we gave up some acres in the upper Midwest last year. Some of that because of too wet, and we switched to soybeans. Some of it price related, that we switched to soybeans, maybe in North Dakota and some other places where we had some new processing plants come online. But looking at the old crop balance sheet first, that's the second white column here. These were the new numbers as of the January crop report. USDA lowered yield, lowered production in this report. It was a bigger drop than expected. They also made some small cuts to feed and residual as well as exports, but ending stocks dropped to 1540, which is the tightest we've been here in a couple of years, but well below the 2.2 to 2.3 billion that we started the marketing year talking about. And so it's kind of been a perfect storm for the corn market. And I don't remember seeing that in a long, long time where production came down this late while demand has grown. And so it's been, again, a perfect storm. Average farm price, the government raised that to 4.25. Probably will raise that even a little further here in some subsequent reports. So this kind of sets us up for the new year. 1540 stocks probably tells us we could use some more corn acres. The question is, how many more corn acres? Well, here's some different scenarios. Informa Commodities came out a week or so ago. They were estimating 93.5 million acres this coming year. The second alternate balance sheet goes back to a year ago where we planted 94.6 million acres. I don't think that's a big stretch just to flip back to what we did last year. The third one on here would be matching the record that we had back in 2012 when we planted 97.2 million acres. Is that even possible? I don't know. There's been a lot of talk, maybe 95, 96. I heard 98 last night. So it seems to be one of those deals where the numbers keep getting bigger. Maybe you have to outdo the previous guy. Whatever the case is, there's some different possibilities. And so let's walk through the balance sheet. For yield, I used a 181 on the lower number and ratcheted it down a half a bushel as we go up. That's probably a little bit lower than USDA will start with, but given the track record of the last few years, I still think that's being pretty aggressive. You can see the production numbers here. Holy cow, 97 million acres. We could grow a 16 billion crop. Even 15.5 is a big jump from the current year. And, now you're looking at possibly stocks bumping up over 17 billion bushels. From the demand perspective, I think demand should stick around. I don't think you've got any other world producers of corn that are just swimming in corn at this point. I look for feed demand to be pretty steady. Ethanol demand probably continue to nudge up against that record high. And then exports are really where the difference is. And I don't think we should see a big shift in exports, again, given the fact that nobody else, none of the other big shippers have a lot of corn. So this would take our ending stocks potentially with an Informa number up to 1951. If you go back to a year ago, that'd bump your stocks up to 2 billion bushels. And then if you go back to that 97.2 million acres, now you're talking potentially 2.4 to 2.5 billion. So I want to bring this up just because, I don't want us to become complacent. When we're thinking about marketing, when we're thinking about insurance, we're getting ready to start setting prices on crop insurance in the northern states. Southern states are already about halfway through the month. But consider what you get with the ECO policy, for example. I'm still looking at that like a 95% put option on price. And with current prices in the 460s, that's roughly $4.40. You're getting a put. If the average price or the average yield in the county comes in unchanged, now you got a 440 put. So I think that's a great tool not only to use from a revenue standpoint, but from a price standpoint as well. And so here's the latest on December 25 corn. As I'm recording this, corn market's up on Wednesday, 5.5 cents on the new crop, old crop up about 11. You can see that we've made a new high, traded at 467, the highest we've ticked since back in June this past year. Here lately, we've taken out the 200-day moving average. We're traded back above the 9-day moving average here this morning. So that seems to be pretty good support. Even these longer term moving averages, the 100 and the 50-day, starting to turn higher. So you've got a lot of positives here on this chart. I still think it's a great place to be starting some hedging. I've been suggesting for a couple months now this 450 to 460 area I thought was a good place to reward the market with a sale. Still think that's the case. And if you haven't yet, I would encourage you to take a look. We've got an RSI bumping up to 68. Stochastics are up in the mid to upper 80s right now. So historically, you look at these times where this happens, where the RSI gets to 70. I go all the way back, even back to May, the RSI wasn't at 70. So this is telling me this market's probably, getting a little bit toppy short term, probably due for a bit of a correction. So not a bad place to start making a sale. Again, look at the ECO policy as well as a put option. And we won't have these prices set for most of us until through the month of February. However, as we start setting them on Monday, looks like at a pretty good level. So again, take advantage of the opportunity the market's giving you. And keep in mind this scenario, the historical patterns in this market. Corn, really now through about the beginning of June is when we tend to make our highs. Once you get past about the 9th, 10th of June, markets typically fall. And so I know most of us don't like selling 100% of the crop or even 20% of the crop at one time. And that's why I think, scattering some sales out here in this Feb, March, April, May window makes a lot of sense to me. The other thing that's coming up here is the planting intentions report comes out on March 31st. And that'll be USDA's first official set of numbers based on surveys for the year. So if they come out with a 95, 96 million number, March 31, what do you think the corn market's going to do? You might start to see a dip already. So I think it's a great opportunity to be making some hedges. Looking at soybeans now, just kind of the flip side. Beans, we're likely to give up some acres this year, and I think we can afford to, assuming this Brazilian crop is a record, assuming they continue to grow record acres in Brazil. But if you look at the current year balance sheet, kind of like corn, USDA lowered the yield and production in January, and it took ending stocks down to 380 million bushels. Now, different than corn, this is still a 5-year high in bean ending stocks, even though it's down from 550 a few months ago, still a big number. And so, we can afford to give up a few acres. We're still going to have a bean crop in the United States, but the U.S. crop doesn't matter quite as much as it used to because of the size of the South American crop. So alternative one would be the baseline number that the government put out back in November at 85 million. My second alternative goes right back to last year when we planted 83.6. And then my third alternative, I took it down to 81 million. And I said, okay, let's say corn goes to 97, whatever. Do the math. That would take beans down to about 81 million acres if you combine those two. So you can see through the balance sheet, we're expecting the crush to continue to grow to a record level again this coming year with new plants coming online. And I think that that's somewhat of a stagnant number. I don't see us all of a sudden crushing less beans if the market goes up a little bit. So, or if we have less acres, I still think the demand is going to be there. Export demand, though, could come down if prices come up a little bit. With the size of the Brazilian crop at a record high already, I'm anticipating already that exports are going to come down in the year ahead. So I kind of fudge them down slightly as the crop acres go down, and you can see what the impact on ending stocks would be. You go from a growth in stocks to possibly unchanged to maybe a little bit of a dip. And 275 is not tight. Takes us back to where we were just a couple of years ago. And again, you've got a lot of beans probably in the southern hemisphere. So even at 81 million acres, it's probably not necessarily bullish if you have a trend type yield. But a lot does ride on the crops in Brazil going forward. And so a little bit more as the U.S. carryout goes down. And so as you look at the chart on November beans, we're making a new high this morning, highest we've been since back in October. But we're bumping up against this downtrend line and we're bumping up against the 200-day moving average. We have not traded above the 200-day moving average in November beans since the fall, December of 2023, I believe it was. And so that is kind of a hurdle for this market. And so can you get above it? Well, you got the RSI now up in the mid 60s. Stochastics are up now, moving up back up into the 80s. So kind of like corn, we're $1 off the lows. Do you reward the market? I think you do. And if you look at the seasonal tendencies in November beans, really this picture is a little different than corn because you've got other people in the world now growing corn or growing soybeans, and that has continued to evolve over the last few years. But this February to May window, or even April, has really been the high spot for soybeans over the last few years. So kind of like corn, I like chipping into some sales, start making some small increment sales. And if we rally another 15, 20 cents, sell another 10% or 15% or whatever the number is. So with that, again, want to take a minute to show you these numbers. We'll continue to update these as we get into spring, as we get into the crop insurance season. But again, my goal is to help you guys put together some plans and take advantage of the opportunities we've got. So with that, thanks for listening. Take care. We'll talk to you again soon.